Good morning. Welcome to this presentation by my team consisting of myself, Ruth, Xiang An, Simon, Stuart, Han Cheng, and Chia Yi. This presentation will be discussing the financial projections for 2016 based on the information provided by LTSB. We have prepared the cash budget, pro forma income statement, and pro forma balance sheet, which I will be discussing, and the evaluations and brief comments will be discussed further by my other team members. As you can see in the cash budget, it shows an ending cash balance of 1,419,500 ringgit. This may appear healthy, but in more detailed examinations on a monthly basis, the company is anticipated to face some serious cash flow problems, which will be discussed further by Xiang An. As for the pro forma income statements and balance sheet, any potential problems are not obvious at first glance and would require further analysis, which will be explained by Chia Yi. Based on the pro forma income statement, as you can see, the company is expected to make a net profit of 211,500 ringgit. In the balance sheet, the cash figure shown here is obtained from the cash budget, and as for the net profit shown here is obtained from the pro forma income statement. The trades payable figure is actually the cash received from customers for holidays booked, which services have not been rendered yet, and therefore it is a current liability. In summary, we will highlight certain issues and problems that will be encountered by LTSB based on the pro forma financial statement in 2016. We will be making certain proposals to rectify the issues and problems. Without further ado, let me pass this presentation to my team member Xiang An to continue.
Well, the very first step in cash budgeting is the estimation of cash receipts, which is from the sales forecast. As you can see in this graph, the holiday book in year 2016, in February, March, and April is the most holiday book, and in June, July, and August is the least holiday book. The next step in cash budgeting is the scheduling of expenditure, or to say, payment made by LTSB. It includes monthly expenses such as salaries and repairs that remains constant from month to month, and also the trade payables for adventure holidays, electricity expenses paid quarterly, and the local tax paid by 2 equal installments, which is on April and October. This results in a negative cash flow in June, July, and August, and September. The following step in cash budgeting is the determination of desirable cash balance. As shown in this graph, there is a negative ending cash balance in September, resulting in the negative ending cash balance of the following month. Therefore, it requires an external sources of short-term finance to resolve this problem of negative ending cash balance.
Now I will be presenting for the external source of short-term finance. Short-term finance means by borrowing more funds to finance the company cash flow within a year. External source of short-term finance consists of bank overdraft, bills of exchange, debt factoring, and invoice discounting. We would like to suggest LTSB to review to bank overdraft because it is inexpensive, easy to arrange, competitive, which reduce the interest rate, and the interest rate are charged based on the company credit worth. So, why do we need to have a short-term finance? As shown in the yellow highlighted, the cash payment from the June to September is higher than cash receipt, which show a negative net cash flow. Therefore, it resulting ending cash balance to be negative of 660,000 in the months of September as highlighted in red color. So, it requires short-term finance of 860,000 to maintain a minimum ending cash balance of 200,000 that's shown in the calculation. This enables the company to pay any contingency sums such as advertising beach and adventure holiday to attract tourists. With the adjusted cash balance, the loan could be repaid in full in the month of November, where available cash balance of 371,000 exceeded the amount of 200,000 after repayments of 860,000. After adjustments of cash balance, it would not affecting the year-ending cash balance of 1.4 million as shown in blue highlighted.
Since LTSB has sufficient cash flow in the early month of the year, we have suggested that they shall enhance their company's wealth by proceeding to an investment. The term of investment is to talk about the process of investing money for profit. Now, let's talk about why need to invest. The way to do investment is to maximize the share or stock value of firm to gain profit. However, LTSB shall ensure the money that generated by the investment should be more than the cost of undertaking the investment. For instance, if LTSB invested 1 million ringgit, it will generate the income of 0.5 million in 5 year times, and the investment return shall be 1.5 million ringgit. In order to have a safeguard investment for LTSB, we would like to suggest wholesale band, which have lower risk. This is to prevent the market fluctuation that may cause the risk to the investment. Wholesale band is known as an investment man that can help business gain profit through lending money directly, find a group of band, lend them money, and sell shares or bonds of the business in the financial market.
On the revenue recognition principle is based on a company's policy of waiting until holiday has been taken or were due before realizing profit on them. It is based on the two underlying assumptions in the accounting principle of accrued basis and cash basis, in which accrued basis is to record each transaction as it occurs, and revenue recorded when cash received or expenses recorded when cash is paid is under cash basis of accounting. It is clearly indicated that the company is using accrued principle of accounting because the customer pay full at the time of booking, in which it is in terms of advance payment and liability to a business. The customer give funds to a business prior before receiving the services, and the services for business that are not fulfilled yet cannot be recognized as revenue. In a proper way, it is to treat it as a liability. Revenue will be overstated for current period and understated in the following period if the advance customer payment is critical for period-based accrued financial, and this will result in inaccurate financial reporting. To further elaborate on the accrued principle of accounting, LTSB has adopted the policy of realizing profit on the day in the month taken and not when payment were made at the time of booking. This clearly indicated that the company is using accrued basis of accounting. For example, revenue are recorded at income statement when earned, and it matched the matching principle. For example, expenses to holiday which are paid in the month holiday are taken must match with the same month which revenue recognized from the holiday taken. The same also occurs for expenses. The electric bill received by LTSB, which amount to 15,000 every quarter, has to be accounted for by recording 60,000 as expenses in the income statement, even though the electric expenses for the last quarter amounting to 50,000 is only paid in the first quarter of the following year. Results in uncertainty of payment. Payment should initially be recorded as expenses and recognize the payment as revenue only when service is provided. This concludes the end for the accrued basis of accounting.
The current assets increased 28.3% of the total assets that due to the increments of cash in 2016, while the total liability increased 2.3% of the total assets, which may indicate the liquidity problems. However, LTSB does not have to worry about the liquidity problems, as no refunds to the customer.
The liquidity of the firms to pay the short-term debts can be measured by two approaches, which are the current ratios and account receivable and inventory turnovers. For LTSB, it can only use the current ratios to measure the liquidity of the firm. Why only current ratio can be used to measure the LTSB liquidity? Because LTSB has only cash sales, no credit sales, thus no account receivables. And LTSB do not sell any physical products but only provides holiday services.
The current ratio increased from 0.1 to 0.48 times due to the increase in cash. The debt to assets ratio decreased. Even though the total assets is increasing, the total debt increased at a faster rate. The debt to equity ratios increased due to the total debt has increased faster than equity. In overall, the firms is more liquid in year 2016 due to the increase in trade payables, which are advance payment made by the customer at the times of booking.
This concludes our presentation for the pro forma financial analysis for LTSB. For more enquiries, please do not hesitate to contact us. Thank you.